Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about two small cap infrastructure companies which HDFC Securities has identified as the ones that will do very well from here. Now, Modi government has its emphasis set on improving India's infrastructure, and these companies as a result could do very well from here. Also friends, if you have not already become members on Profit and Equities, please click on the join button and follow the steps. This will entitle you to member only privileges. One of the privileges includes being added to our Telegram and WhatsApp group where we discuss profitable opportunities. Also friends, if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Now the first stock on the list is Ashoka Buildcon Limited, which is available at Rs 140.05 and the face value for it is 5. The target price here has been set at Rs 261. The symbol for it is ASHOKA. Now Ashoka Buildcon Limited is an India-based infrastructure development company engaged in construction and maintenance of roads and supporting services to land support operations of toll roads and others. The company operates through three segments, which are construction and contract related activities, BOT projects, and also sale of goods. Now this company is well placed to capitalize on the upcoming infra opportunities with a strong balance sheet, says HDFC Securities. Speedy BOT asset monetization would allow the company the flexibility to bid for more hybrid annuity model or build, operate, transfer projects without increasing leverage, is what HDFC Securities has to say. Now looking at the 1 year chart, this company has not had any spectacular performance and has generally been a laggard. The market cap of the company is 3,931.53 crores, which means that this company is a small cap one. The EPS of 10.19 translates into a price to earnings ratio of 13.74, which is dirt cheap when compared with the industry price to earnings ratio of 23.57. The price to book ratio of 9.69, however, is on the high side. Now, one concerning factor for this company is the very high debt to equity of 7.0867, which is slightly alarming. The company did not pay out any dividends, and the promoter holding for this company is just about average at 54.26%. Also, none of the promoters holding is pledged. Now the second stock on the list is Orient Cement Limited, which is available at Rs 109.05 and the face value for it is 1. The target price here has been set at Rs 140 by HDFC Securities. The symbol for it is ORIENTCEM. Now Orient Cement Limited is an India-based company engaged in the manufacturing and sale of cement. The company is part of the CK Birla Group and its manufacturing facilities are located in Devapur in Telangana, Jalgaon in Maharashtra and Chittapur in Karnataka. Now, as is evident from the 1 year chart, this company has also not created any major wealth for its shareholders. However, after the announcement of the recent quarterly results, this stock has had a huge spike. Now, this is already a cost leader among mid-size Indian cement companies. This is planning to add waste heat recovery system across its Telangana and Karnataka plants by FY21 to further drive of efficiencies. EBITDA and profit are likely to rebound at compounded growth rate of 29% and 105% respectively due to a weak base driven by pricing and cost tailwinds. The market cap of the company is 2,234.09 crores, which means that this company is also a small cap one. The EPS of 2.32 translates into a very expensive price to earnings ratio of 47 when compared with the industry price to earnings ratio of 41.83. The price to book ratio of 2.12, however, is not wildly expensive. The company has a high debt to equity of 1.3379, whereas the return on equity for this company is also not a great figure at 0.0458. The dividend yield is 0.69, whereas the promoter holding for this company is a low number and stands at 37.37%. Another worrying factor is that 7.58% of the promoter's holding is pledged. Now friends, this company has completed almost all of its expansion and now the benefit of operating leverage is supposed to kick in, which could well make it outperform. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Also friends, we are providing the link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not already subscribed to this channel, please consider doing so.